We had assets in Greece, and actually, if you look at those assets, it was a relatively small portfolio which we had exposure to. Those were, the tenant there was a German occupier, and the yield that we ultimately, the bank ultimately took the assets back at was over 10%. And if you look at where Greek bond yields are today, then you think actually that was not a bad hold. But that's someone else's investment today. Opportunities like that are very few and far between, and I wouldn't propose going to Greece anytime soon because, well, on a scale, or with scale. I'm sure there are opportunities out there. I think for selected players, people who can move quickly, and for people who are really in the market, then you can find that you can make money there, but it's not anything like the opportunity that there is in Spain. I think there's a real distinction between Spain, Italy, and Portugal, and Greece. So Spain has thawed. Spain is sort of water with capital. People are more confident that the economy is on the right track at least. I think you might argue that's the case with Portugal, but the market's not big enough. Whereas in Italy and Greece, I think not only is the economy challenged, but Marco's slides on the enforcement rules and how the debt market works in Italy means, for me, I think it's very difficult to get comfortable with any investment there where you're using debt, because it's so difficult to actually structure a deal there where you'd be confident as an equity investor or even a lender, perhaps being on the other side, that you'll be able to enforce and take ownership. So that to me, the Italian market seems completely hamstrung by the legacy of its legal structure, and until that's really resolved, I don't think any investments will really go over there with the great or the same enthusiasm that people are looking at. Western Europe certainly, but not even on a similar scale to Spain, because ultimately when you buy into it, you're buying into a very complicated substructure, which as an external party is very difficult, in my view, in my experience, to get your hands around when things do go. So with that as your exit, again, you have to really be comfortable in terms of either going in there unleveraged, finding, if you find assets with good quality or of good quality, then fine. But if you are starting to look a little bit more down or up the risk curve and finding things with asset management initiatives and using significant debt, then you have to be very careful, I'd say. So I think there's a big difference between Italy, Spain, and Portugal. It's not the same market at all.